For the first time in 10 meetings, the Fed has not raised interest rates. We're going to discuss that. We're going to dive into everything Jerome Powell said. A lot of thoughts there. Before we do, hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We're not financial advisors. We're a couple of guys who love following the markets. Kev, do your own research. Yada yada yada.
Yeah.
Kev, that was one of the longer pressers Powell has had in recent months, from the last few meetings. I'm not surprised by it because this is the first time they haven't raised rates in 15 months. So I was expecting a lot of discourse around that, and we got it. Let's start off. How did you think the presser went? What was some of your bigger takeaways? And we can dive into some more of the details that Powell discussed as well.
Yeah, I mean, in general, I don't think it was a dovish, meeting whatsoever, in my opinion. I think it was a very cautiously hawkish meeting. Again, he didn't want to give too much in terms of looking forward. Again, he kept on saying that this meeting is pretty much based on the data that we have up until this point. They're not, looking ahead, but at the same time, they're also looking ahead, saying that, we might have these rates higher for, we might have some of these rates go on for a period of time, right? Like some of the estimations were going into 2025. So that's really interesting to see. That's not necessarily something that I think is bullish by any means. But I was looking at Twitter at the same time while we were listening to the presser, and a lot of people are taking this the opposite of where he was kind of saying, which is very interesting. Again, markets are usually wrong, and they always try and do the opposite of what this guy is saying.
The markets are right. It's the people who are trying to be involved in the markets that are usually wrong.
Yeah, that's a better way to say it. Yeah, it's just funny to me, man. This guy's pretty much telling you that there's still a lot of stuff that we should be worried about. We're still waiting for, the lagging effects of raising rates as fast as they have. This is, one thing he did say was, we've raised rates so fast that we can kind of take our foot off the gas for just this 1 month to see how things play out. But at the same time, we haven't seen a lot of the effects of, raising rates this fast, this high, So for me, I think that the reason that they actually did it is because there is a lot of stress on the financial institutions. I think that, the last thing he mentioned in the last question was commercial real estate and these smaller banks. These rates are absolutely killing these smaller banks, right? That's why we were seeing a lot of these First Republics, and there's been so many. I mean, Westpac or something like that. There's been a lot of banks that have been absolutely.
There's Western Alliance, PacWest.
PacWest, that's what. My bad.
Seen a lot of them. Let's get into some of the numbers real quick because there were some. This is the meeting where they revised some of the year-end numbers also. So they're now expecting GDP at 1% for 2023 and 1.5% for 2024. That would imply that they do not think we're going to hit a recession and that there's a higher likelihood of a soft landing. One of the reporters asked that question as well. I thought that was interesting. They're projecting unemployment at 4.1% by the end of this year. That would be up from the 3.7% that it came in at in the most recent reading, and up to 4.5% by the end of 2024. They revised up the core PCE inflation for the end of this year to 3.9%, which that's not good. No. So I don't know why the markets responded positively. And then if you look at the dot plot and where they expect rates to have to go this year, the newest revision is a median of 5.6% terminal rate, which is, the markets initially believed that there was going to be one more rate increase this year and then a decrease. They're going to start cutting at the end of the year. That's no longer the case. Now, if you go off of that dot plot number, the expectation is 2 more rate increases this year if they stick with 25 basis points, which seems like the most logical way that they would approach it at this point. I don't think they would go from a pause to 50. So that could mean that we see another one in July and potentially another one in September. That would also, and these numbers will change, right? But this is implying, 4 quarter point decreases next year, which wouldn't be a ton. So there's not a lot of reason to be bullish in the short term, in my opinion. The markets are responding differently than I am. We're seeing the Dow got its losses cut in half. The NASDAQ is now up on the day and is approaching 15K. S&P is about even on the day. So things we've seen this on a regular basis where whatever happens, there's always, when the rate announcement comes out, there's always a move in the markets, and then usually it bounces the other direction when Powell begins speaking, and we saw that play out today. We saw the markets move lower when they saw that the Fed mentioned having to raise 2 more times, but then Powell came out sounding a little more dovish than I thought he was going to, and the markets responded, in a positive way, and it's still pushing up right now. So one thing that he discussed was the pace of the increases and where the rate would top out, and how those are 2 separate variables and need to be viewed that way. Ace, let's keep kicking the can down the road. There were questions around that, and he was beating around the bush a lot. Like, to me, one of my biggest takeaways from this, Kevin, was that I don't think the Fed has any idea what they're doing. I think they are just so lost. I think they're scratching their heads, they're scratching their asses, and they're like, I guess we just keep raising rates until we figure it out or we break something severely. So I don't have a ton of confidence that we're going to avoid a hard landing. And, if you read between the lines, Powell was saying he just going in circles, man. Like, it just feels like they're going in circles at this point.
Yeah, they honestly had no clear direction. Again, that's why they said they weren't thinking ahead. It was pretty much based on this meeting. But I think it's kind of like I saw someone on Twitter put that this is just an insurance policy to save them 30 days or so nothing bad happens in terms of collapses. Wouldn't be surprised by that at all. I don't think they have the answer to bring down inflation without breaking something, right? Obviously, this is the fastest we raised. We went 500 points within a year. 500 basis points within a year. It's absolutely insane. And we saw back in 2008 and 2000 when the rates were going up, it was 25s, and it was like over a period of time, a longer period of time. But for this, 500 basis points in 1 year, and core PCE still won't come down. Like, that's one thing that he said is like, it's being stubborn. It's not coming down in a way.
4.9 still.
It's 4.9
still.
Yep. Damn. Yeah. So that's it's not something that they want to be seeing. It's something that we're dealing with. But at the same time, it's like, we're just not going to raise this meeting. You have a battle with inflation. You need to bring it down. But the reason I think that they're doing this is 100% because of the banks. I think they're really afraid that we're either there's something we don't know, or there's, they're getting some pressure from, whether it's the White House or whatever, to keep things afloat and make them look rosy. Because right now, I think that's there's something that we don't know that's going to collapse, whether it's another small bank. And that's why I brought up, commercial real estate being an issue. And a lot of these are banks, smaller banks are exposed to commercial real estate. And, the rates going up just absolutely hurts them more. So it'll be really interesting to see how it plays out. But I think he was absolutely, I don't want to say he's like being kind of like a pansy, but he didn't want to answer a lot of the questions in like a truthful or a straightforward way, in my opinion. I think a lot of it was just like, well, kind of second guessing himself and going back and forth, like flip flopping.
Yeah, I felt like he was beating around the bush a lot. One, interesting question was, where will this disinflation come from?
Yeah.
And he pointed to 3 things. It was the supply side, improving the supply side of things so that prices can come down on the retailers. It was housing services. He brought up the fact that, and this was where I think people started to get the more dovish tone, was he brought up the fact that new leases are coming in at lower levels, and then non-housing services. And that's where we're starting to see the earliest signs of disinflation, is what he said. So that is where I think people began to get, and I think it was interesting because I was listening to him and I was watching the charts, and you could just see the movement, on the, like, by the minute, based off of what he was saying. And that was the point where it became the most, when the markets moved up the most, was when he was discussing the fact that they are starting to see early signs of disinflation. I would like to believe him, but when we see these inflation numbers come in so high, especially the core inflation numbers, and he brought up that like rental prices make up like a third to half of some of these inflation statistics, that's really big, and that can be sticky as well. So it's, like I said, I think that they are just so lost right now. They're I feel like it's a wish in one hand, shit in the other situation, and they're taking a big old dump at the moment.
I mean, the worst case scenario right now, they skipped, and he said, oh, maybe I shouldn't call it a skip, but that's what it is. These companies are still paying, 5%, right? on federal funds rates. So again, it's still sticking around for a period of time, right? Again, we're going to see a lot of the effects, as time plays on. That was one thing he did say. So one thing I do believe him when he was talking about that, we have yet to see the full effect, especially in the jobs market. But it's I don't think they know what they're doing to the point where they can consistently make a decision and agree upon it. I think a lot of people within the Fed that are voting also disagree with what they're saying too, which also adds to just the absolute, let's just not do anything this time around instead of actually solving the issue. Something has to break. We've raised rates too fast, too high, and at this point, it's like you can go one of two ways. Either inflation comes down completely and there's no issues, or there's an absolute collapse. There's no medium landing at this point. It's one or the other. And I think that their inability to just consistently make a decision and agree upon it and to combat, some of the issues that are going on, it's probably going to be more of a collapse than it's going to be soft landing. I just don't buy the soft landing narrative. I think this is playing on way too long. We see that the markets are extremely frothy right now. There's still buying into this stuff. I didn't think he was dovish at all. I'm sorry. I didn't think it was dovish at all. I think it was more of just like you said, beating around the bush to the point where it wasn't really given a straight answer. And people took that as, maybe a little bit more favorable than what he was saying about we've yet to see the lagging effects of these rate interest, raising the rates. So it's I don't know. It was also an extremely boring meeting too. I'll be honest with you. I was yawning a few times in it. Definitely long, but I don't know.
You make it sound like an FOMC presser is an exciting thing.
It was absolutely boring though. I was like, man, what the heck? Some of these questions were terrible, first off. But
there were some times where I'm just like, I expect better from these people. Like some of them, they were asking the same question over and over again. Actually, near the end, some of the questions got better because one dude talking about some different stuff.
That one dude's like, I forget what the exact quote he said, but he was like, "Are we actually going to see like some of this play out, or are we just going to be surprised by it?" And I'm like, you know what? At this point, I wouldn't be surprised. Obviously, I know at this point the markets are not going to move off FOMC or any of this shit. 200 points here or there, that means nothing. If we want to see this market absolutely collapse or shoot up, it's going to be when you least expect it. I think that's the way it's playing out. The Fed obviously has no guidance in terms of what the market's going to do. They're going to buy this shit regardless until someone just says, you know what? I'm gonna destroy everyone that's going long here. It's the only way this market's gonna play out. It's just gonna get to a point where it's gonna be, you know what? Sell it all. Sell it to the COVID lows, and then everyone that's going long is going to keep trying to buy it up, and it's just going to keep dipping. It's not going to be Jay Powell.
God, the VIX just went under 14.
I know. I was watching the whole time, man.
The DXY went over 103 for a little bit. Is slightly over that now. I think the markets are out over their skis, and I think however we close today, whatever direction we're moving, I'm anticipating a movement in the opposite direction tomorrow. Mm-hmm. If we keep moving up, and if we only got 27 minutes left in the markets on the TradFi side, I don't know if we'll see a whole lot more movement in that time. But if we close up on the day in the NASDAQ, I would expect a move down tomorrow. But once again, not financial advice. Kevin, as you look at the charts, what pops out at you? Crypto is just so flat and so boring right now. Where do you think things are headed? I know obviously you think they're headed down.
Yeah.
But what pops out to you right now?
Absolutely nothing. This crypto is boring. I don't know. It's like watching paint dry, honestly. We've seen a little bit of Ethereum drop recently. Some people have been selling Ethereum. I sent you that tweet last night where it was like
250,000.
Yeah, 80,000 ETH was like $250 million. There's a weird thing about that. There was two transactions that were that high that were sent to Coinbase, and they weren't the same wallet address. So that's really interesting to see. So maybe it's someone who had 250K or 250 million in two separate wallet addresses, both sent to Coinbase. But it's there's a lot of supply that's entering these exchanges, and I think people are just at the point where it's like, okay. Now, maybe they're not the best traders, but they definitely have a lot of money. They're like, okay, now I know that the market's not going to go up from here. Let me just put in some supply onto the exchanges and see what bids I can get off of them. And maybe that's what's happening. But when I look at ETH, it's down. It's at 1730 right now. It's came back or no, it's been dipping for the past few weeks. Let's see daily. I'm going to pull it up on the screen right now too, because we don't really talk about ETH that much recently, but ever since the Hinman docs and everything, it's probably a good idea to talk about it. Let's see, 50. Yeah, so it's below the 50 moving average on the daily. It's above the 200, is finding support on the 200 EMA. If we look at the weekly, we're below the 50 moving average, and we're likely going to test this 50 at some point. When is that? I have no idea. It looks like this is a trend to the downside, right? We got a massive bearish engulfing candle, came down, got a little bit of bounce. Now we're dipping again. This could be a wave 3 potentially. So we could be, we could actually probably get to 1596. I wouldn't be surprised if that happens. Again, these markets are absolutely stupid, and ETH for some reason just has been extremely resilient along with Bitcoin, right? Bitcoin and ETH haven't really moved that much recently as opposed to how these alts have absolutely moved. So when I look at this, I think that, we're probably coming down a little bit. I would like to see that there. If you look at Bitcoin, it's still, $100 under 26K. Just absolutely insane to me. I'm not even going to fight it at this point. It's just like, all right, I know that I'm right. I say that, but I know that I'm right to the point where it's like, okay, this is going to happen, but it's just not going to be when I expected, right? I didn't expect everything last Friday to absolutely sell off. I expect that to play out over the weekend and maybe see a little bit of the volatility today. But it happened that night. Everyone just said, screw it. Let me just start dumping all these alts because of the SEC. I think some of that fear is fading away, which also is a bad thing because that could be complacency. Then people are like, oh, no, it's over. Let me just buy in and hold some of these bags. Not a good thing. But Bitcoin right now, you're on the 50 moving average on the weekly. The 200 is at 24K. Again, I still think that this 25,280 is the one that we need to watch. We break this level, we're going to be going down to, 22K, 23K, which on the monthly, I believe is our 50 moving average. Yes, it is right there, 23.127. So that right there is probably where we're going to end up, in my opinion, for Bitcoin at some point, whether it's this month or next month. I do expect us to fill this fair value gap that we created here, and we'll be there, and maybe we can get a bit of a recovery from there before we put in our final leg. But if we look at Bitcoin dominance too, it's dipped since yesterday, right? There was I think the height of where we were yesterday was, let's see, height was 49.29. Today we're at 49.11. We went all the way as low as 48.94 today. So it's really interesting to see how that's playing out. We're seeing USDT, I always fuck this up. Tether dominance, I'm just going to call it that from now on. Tether dominance is kind of like flatlining over the past few days. It's at 8.15, still extremely, I think that's pretty strong. But again, we have to keep an eye on this because this doesn't give me a lot of confidence unless it's a continuation pattern and we're just going to continue the trend. That's something we're going to have to keep an eye on. But for the most part, I think that we're seeing a lot of just stagnation, like it's completely stagnant in the crypto markets. It's not fun. Friday was fun, but then it's just like every time something bad happens in the markets where it drops, people just buy it back, and then it just stays sideways for a while. It's like, come on, man, give us like a really bad week just for fun, or like a really good week. You know what I mean?
Just for fun.
Just for fun, man.
Just for funsies. Let's just like send it all to hell.
But let's yeah, exactly. Let's look at Binance though, because someone brought up an interesting thing on Twitter last night, and I was like, that wouldn't be too out of the ordinary. That would remind me a little bit of FTT, but obviously we found support on this 200 EMA, right? This is the weekly, and that's at $223. We bounced right off of it. Now we're pushing up. Probably going to find some rejection around this parallel channel at the bottom of it. It's around $254. If we look on the daily, we tipped right to it, got hit it, and got rejected. But it looks like we have some room on the stochastic RSI. But there's one question I have, and I'm not sure if this is the right question to be asking. I think, a lot of people were shorting down here, getting squeezed a little bit. My question is, how are they supporting the price of this? And there has to be a reason why this is going up, right? I think that Binance, we look at Binance, and that's where BNB is being bought most on right now. A lot of people are, just, spot buying Binance, BNB chain coin, whatever the shit is. It's a shit coin. I don't care what it's called anymore. But I'm looking at this thing, and it's like, okay, so likely it's Binance that's buying it on their own platform. But what are they buying it with? Because they don't have BUSD anymore. So that stable coin that was being printed money out of thin air is absolutely gone. They could be using Tether. We saw tons of Tether being shot over to Binance, and maybe that's why the Tether reserves are, a little bit lower, because that money was moved from USDT market cap all the way to, BNB, and that's why BNB is taking a little bit of a leg up. It's another thing. The other question is the price is not moving too much at all. So my biggest fear is, and again, this is why I don't want to scare anyone. I'm not going to create FUD, but let's look back what FTX did with FTT. And what they did was, I'm going to pull this up right there. Yep. This is my biggest fear, is that they're using customer funds to prop up the price of Binance coin, the BNB chain coin. That would be an absolute worst case scenario because that just means a lot of people's money is actually not in their accounts right now. But again, what would be the reasoning for keeping that afloat? I don't know. Is there any real utility? No, I think it was just a place where they could put a lot of their money and they just hope that it would passively grow. But clearly, if the exchange goes down, then maybe that's the play. Or maybe they're just trying to short people who are not believing in what do you call it? We like FUD. Yes, we do. No, I'm just kidding. I don't like to spread FUD at all. But it's one thing that I really am considering. I saw someone post about it, and again, I like how CZ's like playing the guy who's just coming back every time and saying, "Oh no, four, don't worry about it. That's just FUD. We don't want to. Don't believe anyone on the internet." But it's just absolutely insane that the CEO of a company is just like so adamant about going out and fighting all these people that are just trying to flood his company. Maybe they're solvent, maybe they're not. I don't know. We know that SEC and Binance US deal or asset freeze was delayed by the judge. They have until tomorrow to come up to either an agreement, which some people are saying the agreement is near, but at the same time, it's like CZ won't come out and say something like all is well, but he'll say all is well when it comes to some random Twitter user just saying, these guys are going with a zero is a bullshit coin. So clearly there's some energy being misplaced from him on their end. I think he's just trying to keep people from pulling money off the exchange. Again, I could be wrong too, but it just seems very I'm very skeptical of most exchanges right now. And of any of them that I'm the most skeptical of, it's that one, especially with how the price has rebounded from that 200 EMA. Because below that 200 EMA, there's nothing. That's why I'm like, man, this could be I'm going back to what Ace is saying. He's doing everything to keep the price afloat, only a matter of time. Absolutely. That's my opinion, but I could be wrong. It seems like the end of Scarface, right? Where he's just like, and then he's just fighting everyone in the compound. That's what it seems like.
Okay, then I think I'll have to Photoshop CZ's face onto Scarface there, with a big pile of blow in front of him.
Yeah,
deploying more capital, steady Laz moment. Absolutely.
And then
I was just thinking in my head, like, this is like Terra all over again.
I really hope that people, again, you don't want these companies holding your funds, right? Whether it's stable coins, actual assets, or it's fiat. But my favorite thing is CZ's argument for why people should keep their money on the exchanges. Like, people lose or don't know how to self custody, so they lose all their money. It's like, yes, but the people who are using your platform most likely know how to trade, right? They know how to self custody. So you're not going to be most people that are beyond Coinbase, I'd imagine, would be the ones that don't know how to self custody, right? That's just the way mentally how I'm seeing it. But that's just like a BS answer for why people shouldn't self custody. I think every exchange should be like, self custody is cool because they're not going to lose money. People are still they're going to make tons of money off like trading fees and stuff like that. But his reasoning, his fighting, and then just this price action just seemed extremely fishy to me. So again, be safe. If you have money on Binance, I'm not going to tell you what to do, but personally, I have no money on Binance US or any exchange like that unless I have like a short position open. But I'm not using Binance anymore. I'll let that play out to the point where whether it survives or doesn't.
Binance on Binance.
No, not at all. I like my money, JWeb. I want to make more of it. I don't want to lose it all.
I know you do. All right. I think that is going to wrap it up for today. It's a good place for us to stop. Appreciate everybody for being here. Mr. House, Ace, Randy, as always, appreciate you guys. For anyone else who's watching, thank you as well. Hit that button down below. We got a bunch of them. There's the like, subscribe, comment, share us out on social media. Our guy, Mr. House, messaged me earlier saying that, you only need 500 subscribers now to monetize. We still got a long ways to go there, but every little bit can help. So appreciate everybody for being here.
First sponsor, Binance.
I don't think that's going to be it.
All right, FTX 2.0. We'll take you guys.
All right. Well, I'm going to be traveling the next few days, so we'll have videos out, but it probably won't be our regular live stream time. So appreciate everybody for being here. We'll be back tomorrow. Have an awesome day. We'll see you next time.
Take care, everyone. And obviously, I was joking about all that.